All right, we have the 10:15. That means you should have had your coffee. You're not quite hungry, right? So it's a good time, hopefully. My name is Marguerite Watanabe, and I have my company called Connections Insights, but I have the pleasure of moderating this panel on emerging technologies. As we're all coming up here, one thing that I shared with one of the panels yesterday is I conduct a survey of the top execs in the auto finance industry, and for the last 6 years, the number one top priority, the opportunity they saw was on technologies. Technologies is broad, though. That's saying, I want to get healthy, or I want to do something. That's just way too broad. Well, how are you going to get there, right? So technologies can be either enterprise-wide or it could be functional. And one of the top, I'd say, functional technologies that we can work on are payment technologies. So this is what we're going to be sharing with you today. So we're going to make some introductions, ask some questions. If you guys have some, please let us know as well. So we'll start with Mike over there. Mike is he's the vice president at ACI Worldwide. You can see their full profiles inside the book, so I won't go into it. Susan is the chief revenue officer at Repay. And Matt is the regional sales director for Paymentus. And Preston Cecil is the co-founder and COO of PayX. So with that, and again, please feel free to catch up with all of them except for Matt, who has to take off for the airport, but everyone else can answer some other questions, and you can spend time with them after as well. So Susan, starting with the consumers. Payments are all about consumers, right? So where are they right now in terms of their expectations of how they should and would like to be able to pay?
So this year, can you hear me? This year was the year of customer experience, right? I think what you're going to hear in the year coming is a term called frictionless payments. And really what that means, there's 4 components to that. There is the simplicity and accessibility of the systems. Is it too tough to sign up? Is it too tough to credential in? How quick can the transaction be? Are there many clicks or prompts to have to go through to kick off a transaction? Convenience, of course, anytime, anywhere, any payment method. And then lastly, what you're going to see, I think, is consumers want their experience to be personal. They want it to be tailored to them. A great example of that is when you log into a website today, you might see something like, hello, Susan, welcome back, right? That's a very personal touch. And consumers are really looking for that tailored experience with the person that they're interacting with the company they're interacting with. In subprime, you're probably going to see a little bit more gamification and rewards for paying on time. We're seeing a lot of that, and consumers are driving that to want to be rewarded for paying on time.
If you don't know what gamification is, please look it up. It's the new hot thing about where everyone's driving training, payments, collections, everything else. Preston, would you say that's just for the young guys, or is that for everybody?
Well, I'm the youngest guy here, and I don't know if I'm going to play games, but if the consumer wants it, obviously it's something that we'll supply to them. From our perspective, what borrowers really want is options, right? So if they want to pay you via telephone, if they want to pay you via mobile app or a website, you need to make sure that you have those tools available to them. While at the same time, one of the biggest emerging markets that we've seen is debit card acceptance for repaying loans. So right now, I think something like 99% of the market is dominated by ACH. Obviously, as people move more and more towards their mobile phones and using the debit cards and Google Wallets, et cetera, that are on those phones, you're going to see the need to increase and take acceptance on those debit cards, credit cards, et cetera. And so really those options are going to help you serve the customer and make them a little bit more happy. But secondly, and the guy in the previous session hit this a little bit on a different topic, but he called it Amazonification, and I really liked that word. And one of the things that I don't know if anybody realizes this, but Amazon's one-click patent is actually up this year. And if you don't know anything about this, some people say that is the single reason Amazon has become the company that they are, because to use a one-click patent, if you're a company like Apple, you actually have to license that software from Amazon. And so as this license expires, I don't think Amazon's going to take a hit. I think they're pretty saturated in the market. But just apply that same experience to customers of you guys, of the lender. Anything that simplifies and makes it easier to make that payment, single click, whatever it is, that's really going to help, one, with the efficiencies, but two, it's going to make the customer happy.
It makes my children happy, that one click. Boy, they have got the Amazon thing down, and it has my credit card on it. So this is, So, well, thanks. So, Mike,
Yeah.
Generally, so we have all sorts of payment technologies out there. What are some of the general categories that you might see that we can say, okay, here are some of the things that you might want to get involved in?
Well, it's changing by the day, right? I mean, there was a session earlier on blockchain. This is fascinating stuff. It will happen. It's just a question of when, not if. We talked a little bit about Alipay, Ant, right? There's Zelle, the clearinghouse. So the clearinghouse just did their first transaction. If you guys haven't heard what the clearinghouse is, it's a solution that's similar to what they're doing in the UK, where 67% of the payments are immediate payments, right? So in the US, they did their very first payment where it's bank to bank with TCH in the middle. That brings the cost of payments down in a way that helps all of us from an exception standpoint. Working personally with MasterCard and Visa, they've had fits, starts, and stops related to their wallets. But given all the fraud issues that we've talked about, wallets will become the driving force in the next 2 or 3 years, where it will sort of seem silly at some point, why are you entering your card information at a website that you're not familiar with? Wallets will become the key way to pay.
Matt?
Yeah, I'd add to what Mike said. I think for us on the stage, right, what we would call emerging technology might not be the same in your shoes. And I know you probably attend this to take something away you can take home right away and use. I say this with respect. If text to pay and responsive web design, if those are things in your mind that are emerging or you haven't addressed, I'd recommend, I'm not a consultant, but I'm playing one up here. I'd recommend moving that from emerging to your must-do. If your customer arrives on your payment experience and the screen isn't stretched appropriately, it's not emerging to us up here, but it might be to you, and I would address that right away. The other items, and a little bit of changing gears, we get questions, I'm sure my friends up here do too, all the time. Do you have MasterPass? Do you have Visa Checkout? Do you have Amazon Payments, Facebook Payments, all of this stuff? I think that in a very short time here that we have, I think the answer to that is if you're working with a professional payments partner, the very short answer is if you truly think your customers demand that, even in the auto world, we'll do it. And it really, not getting into technical speak, is as easy as popping what would amount to a link. And even though you might be doing the exact same thing that you're doing initially, like Mike said, give your customers what they want. If they think they want MasterPass and PayPal One Touch, and if your customers want to pay by crypto and you want to get a BitPay merchant account, all of it, I wouldn't, and it's probably not happening today, I wouldn't fight it. I would accept it and get one step ahead of it. And then lastly, I'll steal Mike's thunder on same-day ACH versus real-time payments. I don't have too much to talk about other than I bet by the time we're here next year, we'll probably have some more concrete things to talk about as far as being able to use those things more than you can today. Yeah, and even facial recognition. I don't think in auto finance you have a single customer today saying, I'm not going to pay you because you don't have facial recognition. Nobody's saying that. But on your Google feed, you probably see that at KFC in China, Ant Financial is using that. So that is the category, unlike the first responsive web and text, that's the category that you need to put as just keep an eye on it.
And it's changing so rapidly. We were just at coupon books just a few years ago, right? And now
right.
Here we are talking about all these. So it really, you've kind of now are not only selling your products, but really consultants as well, I would assume, as you're talking with your clients about what their options are, the pros and cons of each of these. So you mentioned also too, Matt, about prioritization,
Yep.
or maybe Susan, you had said that. So prioritization in a company. I got compliance things to work about. I have a LOS system that needs to be replaced. I need all sorts of things. So where does payments kind of fit into the prioritization for most of the auto finance
Yeah, I mean,
sources?
I'll start. I can just share what I hear all the time. I hear all the time that payments is way up there because, of course, can't have a business if we're not getting our money. But there's always one extremely urgent project that's a matter of compliance and security that's just ahead of it. And I don't blame anybody for saying that. If there's something, we have to listen to you guys. So, I guess if I'm using actual data and feedback I receive, it usually falls in that urgent, right under the most extreme fire. If I had to explain it in just common terms. So I don't know what you guys think.
I would expand on that. I would say that's really a per company situation. If they have already made some investment in payment technology, then they're further along ahead. The cost of poor customer service is huge. So the fact that you are not offering your customers a really good, consistent consumer experience is going to be costly for you. So It's just a little bit of technology to increase that contact with your customer in the way that they want to be contacted, right? That customer experience. So it has to be probably right behind compliance in every single conversation.
That's what I was. So a couple things. One is you have to be able to do a value prop. You know, everybody's IT is constrained. We all know that. And one of the value prop solutions is actually compliance. Compliance is a big seller of why people make change, because that landscape is changing. It puts pressure on the bank or on the lender. What are we going to do? So again, all of us at the table have to be consultants to say, here's what's going on in the marketplace. Here's how you can handle PCI obligations, let's say, for example. This is really important stuff. So value prop and compliance are two of the big drivers, I would say, along with customer experience.
Yeah, and just to kind of put a bow tie on it, as Matt said, when you're dealing with money, it's the most important part of your business. And to be honest, payment technologies, the tools and the interfaces you use to collect that money are the only tools you have in your organization that are actually customer facing. And so to say that they're not important or it's just a cost of doing business, which is some of the feedback we heard early on from some lenders, it's just kind of a misconception. And I would allow you to have anybody at this on this couch kind of show you what they could do for you as far as upgrading those interfaces. But having said that, a lot of the lenders that we talk to, there's really two pain points that they come across. And the first one is usually, I don't have a particular payment method acceptance, or I don't have a particular piece of technology, maybe the text pay, maybe a mobile app, whatever it is, and they're trying to add that to their suite of products. But the second one, and this is one that I never even thought of, and we really got this feedback on our first, half dozen lenders, is they want to uniform their entire infrastructure. So today they may have a vendor for their IVR and a vendor for their mobile, and then they've got a gateway provider, maybe two, and then they've got a system that the collectors work out of. Well, in general, they would like to simplify that, and they want these real-time integration points so that the whole system can talk to each other, and they don't have to maintain a bunch of IT processes in the background. And so the ability to simplify the infrastructure and really simplify the cost structure of accepting payments and speaking with those customers is something that we see lenders are truly asking for.
Almost struggling with. I would assume that you're looking for that operational efficiency while you're trying to meet all the customers or the consumers' needs, and it just gets almost kind of, I would say, competing in a sense with that integration. So along with that integration and those struggles, how about fraud? Because fraud is, you got customer experience, you got data and analytics. I tell all kids out of college you got to do that. And what's the last one? Cybersecurity and fraud. They would have job security forever. So payments, ripe spot for fraud issues.
So ACI worldwide, global company, we have data centers all over the world. Information security is number one, period, end of story. It's a non-starter, anything less than top level, 5, 6 level, Six Sigma stuff. It's interesting, so in bill pay, traditional bill pay, there hasn't been a lot of fraud, right? But what we're finding, and I'm doing a deep dive within our company because now we merged our biller team with our merchant retail team. The merchant retail team is expert at fraud, working with merchant retailers, e-commerce, card companies, because that's where fraud occurs, right? So they're very antsy to get into our space and see how they can help. And what I would say is, just like the collections agencies out there, if you treat fraud just like your collections tools, you have some level of manual analytics combined with if you can get to machine learning, and then take your champion challenger model and continue to work it. This is the hardest thing about fraud is it's never ending. You don't get to a point where you have version 1.0 or version 2.0 and that's it. It has to be agile and ongoing process improvement.
All right, and there are various types of fraud too. You have to have 1.2, 1.3, and continuing for every type.
So real quick on that, so on the biller side, what we've seen is in the card issuer market, as they increase debit acceptance, historically they did not, what you're starting to see is what looks like money laundering a little bit. So that's a case of fraud that's an issue for the card issuers. And then there's probably some people in the room that were affected by the recent fraud related to bogus deposit accounts, where it's an ACH, you get title, then they return the ACH, and the person's long gone. This affected quite a few of our clients. We jumped on it immediately to be able to change, put blocks on not only individual accounts, but on whole routing transit numbers and so forth. So it's definitely affecting biller as well in the bill pay space.
I would say in the auto industry, we have been unique in that we haven't had a lot of consumer fraud. However, when you go to deliver the title, that seems to change things. So I would encourage, if you're delivering titles non-face-to-face, if you're taking transactions in that manner and delivering a title afterwards, that you're doing an extra step to secure that transaction in some way, shape, or form, because that's really where fraud happens in our industry. It's not necessarily a one-hit wonder, right, because you have a relationship with that consumer. So it tends to be a way of getting out of the contract at the end, or maybe postponing a repo, but not necessarily out-and-out fraud like you would see in a retail environment.
So if you were in the session yesterday talking about fraud, they might disagree with you that fraud is actually really jumping up on the origination side, or around the verification issues and how do you get that application with the right person and with the payments. And so with all of these new payments and all these new types, is everything buttoned down? Is everything just clear? Is there someone who's going to be able to come in and, they're not going to come in and want to make a payment, but are they showing that they're making a payment when they're really not? If they're transferring money, that's where.
I mean, at the end of the day, your card processor is on the hook with you because we underwrite the accounts that we support. So at the end of the day, we want to make sure that the transactions are solid because if for whatever reason the merchant that we underwrite is not able to support that, we are in fact on the line for those transactions. So absolutely, your partner should be going over and above the line to make sure that you're collecting really good, solid transactions with no fraud behind them.
Yeah, I agree with everything mentioned so far. And the most often example that I hear all the time, especially if I need to step in and help a little bit, there's a case where somebody got somebody else to use a card, right? And then later, to avoid a repo, there's a chargeback situation. Everything that we're trying to do in life is making things more efficient, streamlined, and non-manual. The reality in that case is, and I'm sure we all do this here, or the correct people in our organization do it, you do need to work with a partner that when there is a manual case and you need to retrieve facts. In my previous life, I worked for an organization that was just kind of, hey, it is what it is. Take that charge back and move on. You need to work with an organization that'll at least, at a minimum level, work with their processor to get you the facts you need to, if you choose to quote unquote battle the transaction. In our world, it seems like that is when it comes to fraud, at least in the payments world, under the origination is a little bit different. I think that's what we hear about the most. Simple stuff, actually.
Mm-hmm. Sounds like it could be a competitive advantage for each of you as well, saying that you are a partner and you are taking that responsibility, and I think that's important. What happens if there's a case of fraud? How would you, reputation management these days is so important. And so how do you work with your clients if you did have a situation, and hoping you haven't had to have a situation like that, but just, working with your finance companies?
Yeah, you want to take it, Preston? Or?
Yeah, I'll go ahead. My background is actually in risk and analytics, so I kind of come from a different perspective. I've worked with a few lenders. Again, we're a startup. We haven't had the situation that you've talked about yet, but if we did have a situation like that, I'd be more inclined to look into the portfolio of that lender and say, are there measures, are there metrics, are there data points that we could look at that could help us predict or use third parties why this occurred and who this occurred on, and if it's predictive that maybe we can identify the next case before it actually occurs. And if that is the case, what you can actually do is customize your portfolio using your payment tools, and perhaps folks that are a little bit more fraud indicator high, you may not accept debit cards and credit cards for payments on those transactions. Maybe you lock them down to ACHs or something like that. I mean, there are things you can do to minimize the impact before it actually occurs. But once it's occurred, obviously we'll do everything we can to identify, what happened, how we can prevent it in the future.
I think this is really important, actually. All of us play a role of software as well as payments. And then the third component, which is really important, is service. We replaced another provider not too long ago at a marketplace lender, and they were going direct to an acquirer. So we all represent the acquirer on your behalf, so that if there is a bump goes the night, you're calling us to help solve the problem. This one particular client, they left that service provider because, as they said, they didn't answer the phone, let alone solve the problem. So I think whenever you're evaluating service providers in general, and in this space in particular, it's those exceptions that really is going to test how solid of a relationship you have with your payment and software provider.
And so payments are kind of fairly, we've always had payments, right? We've had to make payments, that's our business. But I would say all these new technologies are quite new, maybe in the last 3 to 5 years even, right, would you say? So a little bit still of the wild, wild west, and maybe have some of those who aren't answering phone calls yet. So how would you recommend to a finance company to go out and evaluate all the multiple providers out there? What steps should they take?
I think you just talk. You know, we're all, I think to some degree, we're sort of a rising tide lifts all ships environment. It's sort of interesting, the folks that are here, I would say, are agents of change more than the incumbents that, you know, may be sitting on their hands a little bit. So just have a conversation, find out what other people are doing in the marketplace to see what you can take advantage of and where the math works. I think that's the biggest thing, because if you don't do triage on the opportunities, it's just going to be too much. The decision gets too big. Next thing you know, you get RFPs that are delayed a year or two, and that's not a way to process improve.
Sure. I think, you know, as Mike said, talking, vetting, calling their existing customers, finding out have they recovered from a bad situation is key. So talking to their existing customers, I think, is vital in that, because you're really not going to hear everything you want to hear from a salesperson. You're going to hear from their customers.
All right.
Yeah, you know, my advice, and I'm on the other side of the negotiation usually, but I had the opportunity recently to be a buyer in a telecom situation for my community. Certainly not exactly the same as a payment situation, but the people that we're looking at kind of resemble the payments landscape. You have the entrenched incumbent, you have the hungry up-and-coming company. So my advice, if you said just give me one piece of advice, I don't want to take a bunch of notes. I'd say if a company promises you something, get it in an SLA. You know, I know that seems so obvious, but you know, if you run into a company that seems like they might be promising too much, hey, get it in writing, get it in an SLA, and if they don't do it, it's a breach. That's not usually advice I'm giving as a salesperson, and the other way around, but hold them to it. You know, really get into, think about what it is you demand. Uptime, right? Uptime. If you're a payments provider and you're not 100% up, you know, you shouldn't be in the ball game. So that's my advice on working with a provider. References, like we spoke about before. We're fortunate. We have some people that really volunteer to be references, so we're very lucky on that part. So references are important. And then you might not know it, but in your personal lives, I bet on a monthly basis, depending on how you prefer to pay bills yourself, you probably use one of the four of us a couple times per month, even though we're not prominently displayed. So if you, and we're, again, fortunate, we have people that used us for non-auto related stuff that end up calling us to become clients. Think about when you're doing your own payments, think about that experience, and then think about your own companies and say, is this experience with this company in tiny letters on the bottom, the engine, mirror or mimic what I would like for my company? That's some good advice and something you could do in your everyday lives.
Are switching costs tough? So if you had a SLA that was breached, is it easy to switch between payment companies, and or can I have multiple ones, or is this a really tough thing to do?
Yeah, I'll take the tail end of it, and then Preston, if you want to handle the second.
No, yeah, I mean, we've probably talked to over 100 different lenders. Typically, it's going to come down to integration points, whether or not we're integrated with your underlying loan software, as well as if you're under any contracts with your current payment processor. And so I would also encourage you, as you do choose new providers, you know, make sure they stand behind their products and you don't sign anything long-term. You want to make sure that you're getting a good deal and that you always have the ability to champion Challenger with anybody on this stage, as well as anybody else you may run into. But in general, it's going to come down to whether or not the underlying systems that you operate in are open to integrating, and if so, it's a pretty simple move, and companies like us actually do the heavy lifting so that it's not a huge project for you.
Do you want to add?
Yeah, you know, most, if I had to just say the last 20 clients that I brought on board, one of the first conversations we have is, do you work with XYZ software platform? So that's something to think about. And the reality is, if you really like a certain payment provider, you've looked at someone and you really like them, only you can motivate that software company to work with them if they're not already working with them. Us calling them up here and saying, you know, we're great, you need to work with us, that's not holding any weight. So if you really desire to work with a certain company and your software company doesn't do it, pick up the phone, call your rep and say, hey, I found a company I love, work with them. If they're already working with them, hopefully they're able to demonstrate all the efficiencies you'd expect with two systems working together, you know, automated real-time file transfers, things of that nature. This conversation could probably go on for another 20 minutes, but just again, it comes down to the experience you desire your customer to have. Will this payment company I'm looking at work nicely with my current software company? And does my software company, are they open-minded enough to consider a new partner if they're not working with them? So.
Perfect. I would say we can run as fast as you can run, but sometimes the DMS partner between us can't run as fast. So it's important to know everyone's timelines, yours, your DMS partner, and ours, to make sure that we get the live date correct. So
It's all about that kind of in sync, having everyone in sync. So are there any industries that, auto finance is not known as the one that's out there kind of leading the charge for everything. But, we're making our way through that. Are there any industries that we might want to follow and say, you know what, we want to be like them when we grow up?
So I think every vertical has its pros and cons. So I manage consumer finance across the country. It's 4 billion bills a year across mortgage, card, auto, installment lenders, so forth, et cetera. And what I would say is, the card issuers, obviously they're good at loyalty. I think there could always be room for that in this world. I think they're good at fraud, like we talked about. They're not good at debit acceptance because they've been lazy on using online banking. Mortgage is way behind because of the downturn. I guess they've gotten good at compliance and regulation. But they are way behind the curve, quite honestly. And what's kind of fun, I think, is this marketplace. Because this marketplace actually, even going back to the last question, enterprise bank is different than enterprise captive, which is different than subprime smaller shops, and each one's going to have its own challenges. I would say subprime auto is my favorite because you guys have the highest percentage of good funds debit acceptance, so you know the math, what's working there, which is great. I think the captives are struggling with some compliance issues and a whole bunch of legacy systems that they have to replace. So I think everybody's in a little bit different situation, but at the end of the day, there are things to learn from each vertical for sure.
Sounds great. So I'm going to ask each of you, just if you had a few words, 30 seconds to tell the group, this is what, we want you to take.
Yeah, I hope that obviously you've learned something today, but if you haven't, obviously contact any of us. But do not consider payment processing a cost of doing business. I think that it can truly add efficiencies and increase the value of your portfolios. I believe it can increase collection rates. Feel free to champion, challenge your portfolio to prove this out. If you don't trust us, ask us for references. But in general, I would tell you not to be complacent with the systems you have today. Look at the technology that's emerging. Look at the acceptance, whether it's debit and you're not taking debit today, or some other new technology that comes out in the next few years. And really make sure that you're participating, because in the end, the quicker that you can get to what the market's demanding, the better your portfolio is going to perform in general.
Yeah, I'd say on your notes right now, and I know I mentioned this earlier, do a 1, 2, 3 category, right? And my opinion, and there might be other opinions, is category 1, look at your mobile situation, responsive web and text. Again, I don't call that emerging, but imagine your customer not being able to do those things. Put that at category 1 and call your vendor and talk about that tomorrow if it's not the way that you'd want it as a customer. Put category 2 as again, I know repetitive here, but put it as the things we'll be talking about next year. For some of you who have been so hesitant for debit card, maybe real time or same day ACH when it comes as it should, consumer ready, maybe that'll be your solution, and you never got into debit card in the first place, and maybe now you don't need it, so maybe that's category 2. And then category 3, your Google feed, put stuff on there like facial recognition, stuff that's going on in other parts of the world, and just keep it as your feed, and every once in a while look at it and say, that might be something we're doing in 6, 8, 10 years.
Now, I would say if you're struggling with the decision on cost and you have to convince someone in your organization that payment technology is worth the cost, then start drilling down the actual cost of payment acceptance outside of the processing costs, because I hear lots of conversation on cost of units, cost of leads, but I don't hear conversation on cost of taking the payment outside of the 1.5% or the 25 cents per transaction when it's actually about $2 to $5. Payment acceptance through technology is about 30 cents a payment. So if you're struggling with the cost, then drill down those costs even further into the real estate and the labor costs, and you're going to come up with the ROI very quickly.
Yeah, you're spot on. That's what I was going to say. Just do the math, right? And do the math beyond the cost of transaction. It's got to be all in, right? What's the cost of a call? What's the cost of payments? rate your customers, do surveys with your customer, find out the value of customer experience as it relates to retention. Be all in on the math because it's going to help you when you go to your CEO or CIO to try and get budget for this. So you might as well do the math up front. The other thing, again, I said before is whether it's customer experience or whatnot, it's got to be a constant process improvement. These are not big installs where you do something and then you go do something else. This is has to be an ongoing agile process if you want to keep pace with what's going on in the marketplace.
Thank you. And with that, please join me in thanking the panel here for sharing all their insights.
Thank you, Marguerite.
Well, thank you. And have a great rest of the day.